Okay, so today we're gonna finish chapter 3 handout. This won't be too long, half hour or something. And then we'll try problem PR3-1, which I'll be sending out shortly. Yeah, so that's it. I guess there's no way to make that more interesting. All right, so I think we stopped on number 8. And we're talking about depreciation, which we did up here. And depreciation, the journal entry is always going to be the same, but the calculations are what we're more looking for here. So coming down here, we have a machine that's going to last for 5 years, costs $12,000 a year. So this is going to stretch for more than one period. Just knock the cord down. So it's going to last for 5 periods. So the question is, how much should we recognize as an expense in each period? You know, it's going to, we paid $12,000 last for 5. So how much is it going to be in each period? So how much will we depreciate on this thing each year?
2,400.
Yep. So the cost is 12,000. We're going to divide it by, it's going to last for 5 years. Oops, that's not what I want to do. So it's $2,400 per year. Oh, let's put it down here. Ah. Okay, so about this equipment, it's going to last for, we estimate it's going to last for 5 years. And we got to make the adjusting entry. Now, the adjusting entry, I think I told you guys this, the morbid way we remember it is the end of its life, it's dead. I wish there was a better way to remember it, but it's, so DE and then AD, the debit first, credit second. I don't care whether you put debit or credit first, as long as the expense is a debit, that's fine. Okay, so E, and then down here we have A, D. So this is depreciation expense. And we're going to depreciate 2,400 of this thing. And then accumulated depreciation. Oops. Is 2,400. So this is our journal entry. And we're going to do that every single year for the next, well, this is the first year, so the next, the following 4 years. we'll do this same journal entry. Same amount too, 2,400. This accumulated depreciation is a contra account. It's going to go against the equipment. So this equipment is 12,000, but then you're going to subtract out 2,400 the first year. Next year, you'll subtract out 4,800. Following year, whatever, 7,200, and so on and so forth until you subtract out the entire 12,000. You go zero, but let's put it in down here. Okay, so somewhere in the assets, we'll have cash and everything else in there. But we're going to have equipment. For 12,000. We're going to subtract out the accumulated depreciation. And this will be what they call the net assets, or net equipment, I should say. What is that? 9,600? I think it's 9,600. You want to check that though. Oh, wait a minute. That's not even close to what I just said. All right. Yeah, and by the way, you guys, if you're seeing me put something stupid on the screen, by all means, let me know. So this is what we'd have for the net equipment. By the way, when you look at a company's financial statements, a lot of times they won't even show these first two. They'll just show net equipment. You know, they don't want to confuse a reader thinking, oh, do we have 12,000 of equipment? Yeah. No, not really. You have maybe 600 left of the equipment. So they won't even show these two sometimes. It depends on the company, but they'll just show the net equipment. Now, there are things called notes that go into the financial statements. So they have all the financial statements, you know, the ones that we've been, income statement, statement of retained earnings, balance sheet, all that kind of stuff. And then you'll have these notes at the end. And the notes can be, for a large company, they could be 50 pages. But the notes will tell, you know, for instance, if they had net equipment for 9,600, you go look at the notes and they'd say, oh, by the way, we bought it for this, and you know, we're depreciating this much a year, and so on and so forth. So I'd have to tell you how they came up with it. So there'll actually be notes attached to the financial statements to tell what you did. It might not be obvious. So, question on this thing? The depreciation expense is pretty straightforward. As far as the journal entry is concerned, it's always exactly the same. And the idea is that you're just taking this item and saying, okay, it's going to last for however many years, and you split it up between the years. What's on that? Okay. Supplies. We put these last because they have the most calculations. Sorry about that. They have the most calculations, and they it's just more involved. And it also kind of leads into, we're going to do a chapter on inventory, which is very similar to what we're going to be doing here. Okay, so number 9, we had beginning inventory of office supplies. So beginning office supplies of that. An additional 400 was purchased. At year end, only 70 of the office supplies were left. How much of the office supplies? I think it should be was. How much of the office supplies were used? Okay, I'm gonna be quiet, see if someone can figure this out. How much of office supplies do we use up during the year? We will sit in awkward silence until someone figures it out.
430.
Yeah, that wasn't much awkward silence, but okay. Yeah, 430, that's exactly it. So we have our beginning inventory, beginning supplies. Uh, 100. We had purchases. So this will increase the supplies by all right, so we have, and this is one of the kind of accounting terms you'll see sometimes, the supplies available. And we'll do for inventory, we'll have the same thing. Sure feels funny. All right, so supplies. So in other words, what was the most supplies we could possibly use? The most supplies we could possibly use is 500. Now, coming down here, we have our ending supplies. And if you think about it, the ending supplies is what was not used, right? If we still have them, then they're not used. So this is really what was not used. So we didn't use 70 of them. So our supplies used was just like I said, 430. Okay, so we could have used 500 of supplies, but we go and we check and we say, okay, there's 70 of supplies that isn't used, so we really we really used 430 of the supplies. So that's what that is. Okay, so what would be the journal entry? Well, first of all, let's think about what accounts are we probably going to use. Now, this is at year end, so we're not talking about the purchases or the beginning inventory or any of that stuff. What we're talking about is at year end, we just want to make the journal entry for this. The supplies used $430. I'm going to come down here. So our supplies account has this sitting in it. Let's see here. They had 100. They added 400. So there's 500 sitting in that supplies account. Now, So this is the beginning amount. This is the purchase. That makes it more confusing. I'm gonna take that out. I'm sorry. I've this class like 1,000 times. I'm still doing, making things more confusing. Okay, so so the supplies account, it shows that we have 500 sitting there. Now, we don't have 500 sitting in supplies. Right? This is the only, this amount that's in supplies. So we have to take out 430 out of the supplies. Are we going to take it out with a debit or a credit?
Credit.
Yep. So supplies. It's an asset going down. We've used up 430 of it. So that'll get 430 out of that account. We get another total here. This will be down to 70. Again, we don't make the journal entry for the 70, only what was used. The used amount is what we make the journal entry for. We need another account. What account do you think we'll probably use? Well, first of all, is it going to be a revenue or an expense?
Expense.
Expense, good. So probably supplies expense, something like that. Oops, that's not how you spell supplies, by the way. Yeah, and now if you know that if that's a credit, the expense is going to be the expense is going to be debit. But again, we know that because expenses are always debits. And nice thing about adjusting entries, there's always going to be either revenue or an expense. So if it's an expense, we know it's going to be a debit, so it'll be supplies. Wrong. Bad teacher. Bad teacher. So the important thing is where people make the mistake, if they do make a mistake, they'll put the 70 in instead of the 430. We always want to look at what was used. So the used is the important thing here. How much of it was used? How much do we have to take out of the supplies? Now what's left over? What's left over will, it'll figure out by itself. But how much of it did we use up? That's really the the question on these. What's on that thing? Okay. And I think I'll be quiet and let you guys see if you can figure that one out. Okay. Sorry. Excuse me. Sneeze came too fast. I couldn't mute my mic. I think you should have got 120. And so that's what we're gonna make our journal entry for. The journal entry is gonna be for the used. It's not gonna be for the ending. The ending will just kind of figure itself out at the end. We'll kind of see that. But yeah, so this will be what was used. So this will be you know what? I'm gonna jump down here for a second. Before I do that, I'm going to do something stupid. Then okay, so supplies. So here's what the supplies account had in it. The beginning amount in the supplies was 30, added 140 to it. So the total sitting in the supplies account at the end of the year was 170. You ask somebody to go out and count up how much is in the ending supplies, they come back and say 50. So you had to figure out, okay, how much of these supplies did we use? We don't have 170 anymore. We only have 50. So how much of these supplies were used up? That's what we have to decrease the account by. What was used. What am I doing? That's it going down. And again, this is for what was the amount used. So notice when we put this in down here, the credit, that this will end up with the 50 for our ending. Now, again, we don't put that one in. It's just, you know, once you take this 120 out, it's whatever's left over. So the journal entry is going to be for the 120. Okay, and we have supplies expense. Oops, because we need a number for that. The expenses are always debits. So that's that one. I think that's it, right? Yep. Question, I think.
No, not right now.
Okay, I think we'll go ahead and do the problem. What is it? I forget what the problem is. PR3 I think I sent it out just recently. I'm sorry, 3A1. This one. You know, I should have labeled the top of this PR. Yeah, all right. Water under the bridge. Okay, so this is a problem out of the textbook, obviously. I kind of made it into more of a kind of what we're used to seeing. A little bit trimmed down. We're only going to take, the accounts that we need. But this would be similar to what, you see in the textbook, how to work this out. Okay. Now, let me go over the rules again, just to make sure that for adjusting entries, first rule, they have to have, oops. They have to have either a revenue so they have to have either a revenue I think the revenue is green, is it coming? And expense. I'll make that yellow. So one or the other. Now you will not have both of them. So you'll never have both of them. It's one or the other. Two. No cash. Now they are going to have other assets, but there's not going to be any cash in these adjusting entries. So they have to have a revenue or expense, one or the other, and no cash. The revenue is for what is earned. Hey, it didn't highlight it. And the expense is for what's used. So you have to have either a revenue or an expense. And there's no cash. There'll be other balance sheet accounts, could be assets, other assets, liabilities, that sort of thing. But you're not going to have any cash in these journal entries. The cash has already changed hands or it hasn't changed hands yet. All right. let's look at the first one. This is similar to what we just did. Okay, so we're gonna make the journal entries on March 31st. So on March 31st, the supplies account has this much in it. I'm gonna move this down to this next one just to make it easier to read. Now the supplies on hand, so those are the ending supplies. Was this. So the question is, how much of the supplies were used? And I don't know the answer.
$4,330.
Possibly. Yes, that is right. Yeah, so 4,003. So the supplies on the supplies account, the 5,620. This would be sort of like the supplies available. You know, there's most supplies you could possibly use.
Is this for the whole year if it's from March 31st, March 31st?
I think that this was for March 1st to March 31st. Let me take a look. Yeah, I think it starts on March 1st. Yeah, that's the. Now, again, for this one, you don't really need to know that, but for this next one, you do. So what is it, 5,620? Yeah, so apparently they're making the financial statements every month. So supplies available, ending supplies. In other words, not used. You said 433, 4,330, right? Yeah. Okay, so that supplies account has 5,620, so we have to take the supplies out of that account. We have to take out what we used up. We used up 4,330, so that would be. So going down, and this is for what was, oops. Supplies used for 4,330. And on the other side, if you have an expense or revenue, we just went over this one. And it was a supplies expense. I did something kooky on the. I'm sorry, this the journal entry thing here is. I don't know what I was doing. But the spacing's kind of weird on it. Oh, I can merge them. Okay. I'll have to do that on future ones. Okay, so this is get all on the same page. Supposed to be our journal entry. Oops, we need another debit. Don't we? This one's actually a little bit easier. We don't have to figure out the available. They just kind of give it to us. So sometimes that makes it more difficult. You don't see the whole thing, but okay. Let's go down to the next one here. Unearned rent. Which is what kind of an account?
Liability.
Yep. Had a balance on March 31st of 5,000. Represented the advance payment on March 1st of 4 months rent from tenants. Okay, so on March 1st, we, whatever they signed the lease, and they gave us 4 months rent at that point. $5,000, 4 months rent. Now that's unearned revenue, and it is going to be a liability. And until they use the whatever this is, apartment, building, store, whatever, we can't recognize this revenue until we've earned it. So they went on March 1st, and we're on March 31st. So we used what, 1 month? Okay, so here's the question: how much is it per month? The total amount is 5,000 for 4 months. So how much is it per month?
1,250.
Yep. So unearned rent, this is unearned revenue. You probably have it, put that in, but unearned revenue of 5,000 divided by 4 months. Oops, equals 1,250 per month. Okay, now we've had it for 1 month. So I'll go ahead and do this. If it was for more than 1 month, if it was for 3 months or something like that, it'd do a little different, but a rational question would be, do we really have to do that? And no, I mean, it was only 1 month. You can just take, just take that. But Okay, so this is rent. We're renting the place out to somebody. So let's look at our little adjusting entry thing here. I'm going to copy this and bring it down. Are we going to have a revenue or an expense?
Revenue.
Yep. Revenue. Okay, good thing about revenues, they're always credits. So this will just be revenue. And it's for what is earned. They're always credits. Unless something wacky happens. This one, and you may want to merge these cells. You don't have to. I didn't do the formatting very well on this one. Okay, and what's going to be on the other side? It's not cash. We've already got the cash. They gave us 5,000 on March 1st.
Expense.
Nope. It's going to be one or the other. So we already got the revenue. This unearned rent. Yeah, no, this is good. This is a liability, remember. This is not a revenue. It might look like a revenue, but it's not. So this is a liability. And it's going down. We no longer owe them $1,250 of the rent. Now we still owe them 3 months worth, and they'll, obviously they'll still be in there for 3 months, but we've earned 1 month of it. So every month we're going to pick up revenue earned of this, and it'll reduce that liability. At the end of 4 months, we'll have no more liability, and we'll have earned all of that $5,000. By the way, how much do we still owe? How much of the revenue is still unearned?
$3,750.
Yep. Take the 5,000 minus what we earned. We earned 1,250, so yeah, 3,750. I need to put this in, but I'm just gonna. So we still have 3,700 and we still have $3,750. We still be under number. So just again, as the second month, third month, fourth month goes, we'll earn those. Okay. Hey, look at this. I'm going to cheat. I'm going to bring this one down to here so I don't have to copy it again. Be lazy. There's one thing I want to teach you guys is how to be lazy. There's not enough people that show people how to do this. Okay, wages accrued but not paid. Okay, so these are wages that we owe. Who do we probably owe these wages to?
Workers.
Workers. We haven't paid them yet. So, well, let's take the easy part. Are we going to be talking about a revenue or an expense?
Expense.
Yep. Yeah, probably something along the lines of wages expense. I'm going to merge these. And the nice thing about expenses, they're always, what do we own? 2,290. And what is it when you owe somebody? What kind of account?
Liability?
It's gonna be liability. We usually call those, well, liability is a category. What is it when you owe somebody, you're gonna have to pay them in the future? What do you call it usually?
Accounts payable.
Accounts payable, in this case, probably wages payable, but yeah, some kind of a payable. You know, the term payable is what we're really looking for. So so we owe these people 2,000, and I should put in what that is. That is a liability, and it's going up. And again, if you know, the nice thing about adjusting entries is there's either a revenue or an expense. In this case, it's an expense. And revenues we know are credits, expenses are debits. Just knowing that means that whatever's on the other side of the equation has to be, you know, in this case, if the wages expense is going to be a debit. We know that whatever it is, whatever the account is on the other side has to be a credit. You know, the debits have to equal the credit. So once you, hey, what happened here? I think I'm going to screw this up if I try to do something. So anyway, yeah, so this will be, you know, the other side will be a credit. But if you actually look on the table, liabilities go up with credits. So we owe them 2290. Yeah. Let's go to the next one. Fees accrued but unbilled. So we haven't sent the bills out for these. This one's a little bit vague. What kind of account do you think these fees are going to be? Now, accrued but unbilled.
That can be accounts payable.
You look at the fees, you probably say, yeah, that looks like it is, but it's actually, this is going to be a revenue. Unbilled means that we are billing somebody else. And I know that's not a very straightforward oops. in other words, we pay someone for the fees, and in the future, we're gonna send out the bills. We haven't sent out yet. Now, we are gonna focus on though what we have earned, and this accrued means that it is a transaction has happened, that something has happened. It just, we haven't got the cash for it yet. I got that up here somewhere, don't I? Oh, it's in the other handout. What am I doing? So it's kind of like here, we've earned this 16,000, but we haven't got the money yet. We haven't sent out the bills yet for it either, so. Okay. So we're gonna talk about a revenue. Now, the nice thing about revenues is that they are always credits. It could be something like fees revenue. Not typing very well. And so this is what was earned. So we've earned 16,825. Now, this means that somebody else owes us money. So whoever we did this work for, they owe us money. They owe us 16,825. What account do we use when someone owes us money? When we owe money, we call it accounts payable.
Accounts receivable.
Yep. When they owe us, it's gonna be an accounts receivable. It's an asset going up. And again, it's an asset because we're gonna collect it in cash in the future. Yeah, this is a tricky one because if it wasn't for that one word, unbilled, if it said fees accrued, the actual thing would say, okay, it must be a, if it just said fees accrued on March 31st, you think that was an expense in accounts payable. The unbilled is a somewhat vague indication that, we're going to bill somebody else for this. Fees is probably a bad, if they said fees revenue, it may have been more obvious what we were doing here. Okay, and we have one more, and luckily it's the easiest one. Probably don't need this, but depreciation of office equipment, 4,600. Our journal entry for depreciation is always the same. End of its life, it is rather morbidly BEAD. So it's be depreciation expense and accumulated depreciation. Or 4,600. Question on that thing? It's good to see somebody, it's good to get different ways of saying it, that kind of thing. Well, it was a textbook problem with someone that they would have. And this cumulative depreciation is a contra account. You subtract it from whatever the equipment, they don't tell us what the total amount of the office equipment would be. Whatever it would be minus this accumulated depreciation. Again, they don't tell us what it is, but if they did, we would be able to see what the carry value of that is. Guys on that? Okay, well, that's it. So, so today what I'm gonna do is I'm gonna put in the submit things here. I'm gonna put in the chapter 3 hand. Let me write this out. So these two will be entered into these two will be for submit. And I will put those in as soon as I sign off. Next class, we might do another problem out of the textbook, but we'll certainly do the practice exam for chapter 3. The more I think about it, we're just gonna do the practice exam for chapter 3 because there's multiple choice questions on this one. Take a little bit more time. So next class, I'm gonna write that down. Parts 1 and 2 over next class. Okay. Any questions? Look at that. We're early. Not by a lot, but by some. Okay. Well, have a good day, guys, and I will talk to you on Thursday. Any questions on any of this?
Yeah, can you go to D? I'm sorry, I was using the restroom.
Sure.
I mean E. I'm sorry about that.
Oh, yes, yes.
Thank you.
Yeah, you're welcome. Anyone else need to see anything? Okay. Well, I will adios, and I'll see you guys on Thursday.
Bye.
Yeah. Good day.
Thank you.
Professor, did you say that this handout was due today?
Yeah, no, it'll actually be due. Excellent question. It'll be due on the 29th. It'll be due next Friday. I would encourage you to turn it in as soon as possible, but it's not due until the 29th.
Okay, thank you.
And it'll be when you see the submit thing, it'll show what it's due. Yeah. I've been making everything due a week, the following week, Friday. Just because I know you guys have other classes and stuff, and sometimes there's more pressing needs. So yeah, so I usually give it to the following Friday to get stuff in. Okay.